What did I do with it? Oh, shit. What's up, everybody? Somebody, Mario, somebody give me a mic check and let me know you see the screen, please. What do I want to do here? Hold on.
Taking a look at the market wrap for today's session, stocks reached new all-time highs, joining bonds and commodities in a coordinated cross-asset rally that, by one measure, was the best for a Federal Reserve Day in 2024. Equities continued their post-election rally with the S&P 500 rising 0.7%.
Thank you. All right, you guys, are you waiting on any earnings?
CKNG.
Oh,
It's about $1 billion in revenue and a slight miss of expectation. Delta Q November Golf.
there's DKNG. Come on with this, man. Why does it keep doing this? Look at
It's
this.
also introducing fiscal 25 guidance range of $6.2 to $6.6 billion. There's to the 6.24 billion consensus. Most of that range above consensus for DKNG.
Yeah, the chat lag is impossible, so that's why we got to keep the coagulation down to a minimum. Unfortunately, I gotta look. It resets everything on me. This is like the 10th time today. I think every different chart and every monitor I use, they make me do it. But it is one big pain in the ass. So DKNG, you got some selling off the number. There's a couple other interesting names too, like Annette Monsters down. Annette came out there. It looks like they're lower here. What else? A few other couple of growth names. We'll just give it a couple minutes here. Let people straggle in and. Oh, Annette's out. They beat by 32 cents. Beat on revenue, guide above consensus, but that stock has been in parabolic mode for quite a while now. So it looks like a little.
Franca for OG, 109 million in revenue, beating the 106 consensus. Franklin with Oscar Golf.
This is Annette. Let's see, Monster. Who cares about Monster?
JFrog, 15 cents for earnings, a 5-cent beat.
Square, Block, whatever the hell you want to call it.
They're commenting on the recent takeover chatter.
UPST's out. Square. What's Square doing? Let's see. UPST, nice little rip. That's all the way up here now. Damn, look at that entry down there, huh? That would have been nice. A firm. Is the firm out yet? Firm's down a bit. Let's see. Toast. Who really cares about Toast? Trade Desk. That's an interesting name. That's been moving really nicely of late. That's TTD. That's lower. Look at that. Look at that run, though. It's had a nice run. Really nice run. And let me take a quick glance. Anything out now here? Bill. I know a few of you like that name. Pins. Pins is out. AB&B is out. So it looks like the majority of them are out. AB&B misses by a penny, reports in line, guides in line. AB&B up.
Exceptional R&G and Parent announced executive partnership to bring AI-powered workforce engagement management to Ring CX customers.
A net down 23. Look at this. A net down 23, 21 now. And you barely could see it on the chart. It's at 400 over here. I mean, it is a $400 stock, but it's down 8%. And look at this move. Okay, like I thought a net was a bit overextended, no lie. Well, it did. It did. You can see that. Look like this rip. You know, it digested it pretty nicely here, though. And just continued. My Lord. By the way, you guys see, Axon, that's Taser, right? That's a great stock. Oh, it's not even on the screen. Wow. Oh my God. That's such a great stock, this Axon. Nobody even talks about it. How about this thing? Are you kidding me? This APP? You talk about egg hatching coming to life? Wow. Incredible. I mean, this was, we've been talking about how that's kind of the sexy part of the market. I think it still is. What we like to call the, underbelly AI growth pocket of the market. So not your well-known name, mega cap name, NVIDIA, Avgo type play, AI play. Which APP is. Oh, what did this guy do? This guy came out yesterday? Duel. Didn't really do much. Did it come out? Oh no, Duel didn't come out yet, did it? Yes, it did. What am I talking about? Look, they put a nice little quarter together, but this thing's still really expensive. So, like, APP dual, they're so tough to buy because a lot of times, as soon as they get noticed, they rip, and then you got to chase them, and it looks like you're getting a little too frisky, crazy chasing moves like this, but they sneeze on these things, because there hasn't been a whole lot of them, and look what happens to these things. It's unbelievable. So these stocks remain on fire. Yeah, Reddit. I know a few of you like that. Been talking about that. Yeah, these are more my cup of tea, right? Definitely. This one too. Cart. They report soon. Look at this move. So again, it's been scarce. Right? We've been talking about it week in, week out. Scarce part of the market, this little pocket of the market. But when you see something you like, this guy reported, and I think it might have been down today for a little bit. I could be wrong, but they just came in and bought it. There was flow immediately. This is another one. I think this is Druckenmiller's play too, right? Yeah, Coherent. So you can make the argument this thing, as much as it's run, it's really just starting to kick into gear. What was the quarter here? Profitable growth, AI ties. All right. I think that's it. Right, earnings. Anyway, let's talk a little bit about the market. We'll talk some names. It's been a crazy last couple weeks. Obviously, this week with the election and all. I think the main takeaway is simply this: if you wanted to make a bet on a Trump win, and as clean as a sweep across the board, right? You take the uncertainty completely out of the picture. I think most people, especially a lot of the key people we follow who are closely tied to VIX trading and positioning and stuff like that, you were likely going to get that VANA, that VIX unwind, that protection insurance unwind post election. It happens every election, every binary event, right? CPI, any of them. The risk is that something goes wrong, right? Not even something cataclysmic, but there is a bit more uncertainty, and you get funds and players scrambling to put on more protection and more insurance because of that event. But once you get, obviously no uncertainty, and for this example here, where the election was a landslide across the board, whether you think it's good or bad longer term is irrelevant, right? Because you get that unwind, that VIX buildup, that protection, that insurance buildup of something, protecting against something going wrong out of that binary event. So that's pretty much it. Again, the risk was something different happening, right? VIX controlled everything. We went into the last, I would say, month now, because it's a few weeks. But the tricky part of what we were dealing with, the backdrop, was for the overall market, it was all about volatility, all about VIX. Okay, if that particular day VIX was bid pre-election as it's supposed to be, that's going to weigh on the equity indexes, the major indexes, no matter what, right? So you're trading off VIX, and then the days here and there where VIX saw a little bit of selling, because again, there wasn't any big rip in VIX per se. It was just kind of an uptrend it was building ahead of the election, which is totally normal. Right? You kind of were getting the buy dips, like we were saying, lower highs type of thing. And you can see the flush out here. Okay? So now you had VIX, the unwind here recently, and you're going to get equities ripping. You're going to get indexes ripping. Now, go over the names. right? Because when the indexes are tough to handicap, or there's a more powerful force out there that you need to worry about, we like to focus on individual names because that's where you can kind of avoid some of that risk. We had earnings risk, right? And up until the election recently, every big move was generated off an earnings reaction. So now we're beyond that, right? We're beyond that now. Okay. But again, I don't think there's no reason to try to overanalyze what took place here, to come to a conclusion of where we're at now. Simply, it was a cleaner event, cleaner election. You get an unwind of the uncertainty that built up prior, and this is the result of it. What we're going to see now, at some point, you get overheated on a short-term basis, right? Almost everything has pretty much ripped here. Everything, not just the Trump trade. It was the Trump trade initially. Now it's everything, right? You get to a point where short-term sentiment becomes overheated. Things get a bit choppier. Doesn't mean the indexes still can't grind higher. It's just going to be a sloppier, messier grind. And you throw in end of the year chase for exposure, right? For performance in the end of the year, which is again a normal thing. You could certainly get that continuation, that grind, right? That overshoot to the upside. Because again, a lot on the professional side, just they didn't come into this event all in as far as individual equities are concerned. So I think what we look for here is we're going to look for certain pockets to start to digest, right? Market maybe get a little bit sloppier. We saw a little bit of it show up today, but you can still see a lot of strength out there. The flow is insane. We'll talk about that in a second. But post-election, tons of activity out there. Again, that's no big shock because that's again big event in the rearview mirror, and earnings too. We pretty much have got through the heart of earnings season here too as well. So big things, big hurdles we got over. So you got a ton of action, ton of momentum, but we saw a little bit today where the NASDAQ was up, the S&P 500 was up, but you had the Dow down and the Russell down. You had the financials, which kind of were sluggish today. They were the first. I mean, they were really the hottest group out there to start. So, again, would make sense they start to digest a little bit on the early side. I think we see more of that. And the question becomes, do we get more of, outside of something that comes into the picture that we're just not aware of right now over the next month, do we get more of a choppier grind in regards to the indexes? And I think there, obviously, you want to focus on where the rotation's going name-wise, looking for new opportunities there. Or do you just get this all-out chase and melt because of that chase for exposure into year-end? Okay, my feeling, right? And let's rewind because it was really interesting. I don't know if it was on this webinar, it might have been on the Sunday webinar for members only. But what we discussed, okay, to refresh your memory, and you get to this point in regards to the market several times in an uptrend in the bull market. Okay, SPX I think is a better look, so we'll go here. What? Oh, these are CTA levels. Let me get this off now. We don't need these. Okay. So we're here, right? We were heading into the heart of earnings season. We were heading into a couple of weeks before the election. We were seeing a lot of upside exhaustion signals. The S&P 500 in particular, right? You had an upside liner here, okay? The question there was, which scenario is going to play out into the election, okay? Do they front run that VIX unwind ahead of the election, right? Because if you remember, they were pricing in the Trump. Remember the Trump odds were he was becoming a big favorite in the odds, not in the polls, but they were starting to price in the Trump trade. So there was a chance that you get kind of this front run of this VIX unwind and this Trump trade into the election. And I think that would have been the more bearish scenario because you could have had a sell the news event. You could have had, if Trump didn't win and you had to unwind that, and you would have had sentiment positioning a lot more on the frothier side, right? So we were at that point, either that scenario was going to take place or we get something like this, right? We kind of were looking at this as an example of this niner, where you get some digestion, you get an unwind of that Trump trade, and believe it or not, even the odds were coming in. Right? All of a sudden, like Kamala was making up ground out of nowhere. And you started to get some uneasiness. You started to get a bid in the VIX, a little spike in the put to call. That was the best thing that could have happened. Right? Because again, it buys you time. What you're trying to avoid in any bull run is that last chase where everybody goes all in, right? Where the market forces the people who have neglected, the people who have spit on every rally, the non-believers, right? Where the market forces them in. Usually those big major tops follow after that type of event. So when you get these little breathers, even though they don't look like much on a chart, but if you get these little breathers, especially around an event or some news, it does a lot of good. It does a lot of good. It buys, again, that wall of worry, buys the bulls more time, right? So now, fast forward to where we are now, you kind of got a slingshot back that's the market we're in these days. There's no grind, lower highs, uptrend type rally when off these type of setups. You get this snap back like a rubber band. So now we're at a point where you're going to get some heat on the short-term sentiment side. We're going to need some digestion in the indexes, and just not to make it as easy as where anybody can just chase anything and make money, right? And then you can find some opportunities into year end, right? That's the more bullish scenario for the next month here. I think obviously the more short-term bullish but net bearish scenario would be an absolute just melt up chase where we see more of what we've been seeing here. Funds tripping over themselves to get long anything because they just want to get long. And you get that into the end of the year. And I think that will be an awful setup. I think potentially even before the start of next year, it could, you could possibly get into a late 2018 type low liquidity, low volume slip up if you get everybody to chase from here. Okay, so that's kind of what we're looking at now. But I think now you still want to lean bullish in a sense here, right? Because it's short-term sentiment that's hot, right? We haven't really seen, and we'll look at that now. That's a good segue. We haven't yet seen that chase. Okay, so there's no reason to be bearish of what we're seeing right now. It's just we need to be a little more cautious because the markets, things might start to get a little tired here, stuff that's been running. Here's hedge funds and individual names, right? So you can see here that dip, what it allowed to happen was it allowed hedge funds to start shorting again. Not in any major way, but they got net short again, right? In individual names. Okay, as opposed to just chasing and finally giving in and going all in. So that's where we're at now, right? We got a couple short-term sentiment indicators that I want to see where they stand at by the end of today. Here's one we look at. We look at this on this webinar too. Short-term composite indicator. You got down. You didn't get quite under 20. That's what we like to see, but down near 20 into the election. And here's where we're at now going into today. All right. So we creep up near the 70 mark again. That's where you want to be more careful, especially on the indexes. But I think right now we want to look for where the money could possibly rotate into if the indexes chop around. Because that's my gut tells me that there's likely the bearish result of this, if there is one, is going to be likely chop where money starts rotating into certain things, allowing things to digest and moving into other things. Okay. But opportunity wise, again, depending on what type of player you are, but on a short term basis, there's enough to do out there, I think, especially in individual names. I think any name off earnings that's down that you have an interest in, and if you're in the steam room, you see some flow in, I think that opens up a trade. Any laggards that are at what we call decent risk reward spots that really haven't gone bananas here, that's an opportunity. And I think just net, like we've been saying, if you see anything catching any sweeper activity that fits that underbelly AI growth bill, that's the hot spot of the market right now. That's the hot spot of the market right now. Everybody's salivating to try to get any AI exposure outside of semiconductors. And we've been seeing it, right? More and more. We've seen it we're seeing it in the freaking, and been seeing it in the Bitcoin mining plays, right? And now, they've had the benefit of Bitcoin ripping as well. So I think that the game plan remains the same. Depending on how aggressive you want to be is how much more you're inclined to chase. But ideally for me, anything catching sweeper interest at a decent spot or off a little bit of a pullback the last few days, because that's what we're going to start to see. Even if the market is chopping around or grinding higher, you're going to start to see stuff pull back, individual name wise. Whether it's off earnings, you get to sell the news and they're taking profit, or just normal digestion. Like these, like even the financials. And again, I understand it's not our favorite. It's not traders in general the favorite spot to play, but if you do play them, they've just been insane. And again, if you look under the hood, right, the underbelly of those financials, if they continue, some of them have already seen action, but if they continue to see action, I think you still have a ton of opportunity there if they see action. So I don't think the script or the game plan has changed here, off of earnings or off the election. All right, I think it remains the same. I just think we got to. I think spots matter a lot more at this point, especially now, because of how aggressive the snapback move has been, and you're gonna get some breathers here and there. You're gonna get some breathers. So yeah, that's where short-term sentiment is. I wanted to make sure those of you who aren't Steamroom members know where that's at. The credit markets, again, post-election, prior to the election, if you remember, we were talking how swaps weren't really signaling risk on, spreads, same thing. But post-election, you're seeing some completely different again, right? Here are corporate bond yield spreads, and you can see I inverted it, right? So I inverted it so you can see the correlation with the market, and you can see this big rip here now, right? Meaning tightening. Spreads have been tightening up, risk coming out of the market. And here swaps over the last couple of days, right? Yeah, nothing concerning, just more of chop, right? Just more of chop. And you can see nice little jump. Again, these are inverted, so meaning the spreads tightened off the election. Okay. For me, again, everybody's different, but right now, I think it's still a trading environment here into the end of the year. I think for, again, depending on your time frame, what I'm interested in going into the start of next year, one, a goal of mine, and we were talking about this in the Steamroom, almost every year you get a sector, not necessarily the most bearish sector out there, but you get a sector that's under-owned or heavily shorted, okay? This year, for those of you who remember, the financials, okay? They were the most shorted group on the street when the calendar flipped January 2024 amongst funds, okay? Obviously, as a contrarian, that's where where decent opportunity is. Maybe over a longer term time frame, right? You want it to be over a longer term time frame, but you've seen what the financials have done, right? Especially if you thought Trump was going to win the election. Yeah, like Goldman was the prototypical Trump play, as it was in 2016. So rewind the year prior, as crazy as it sounds now, and we talk about it a lot, the semis were the most shorted group on the street going into 2023 because everybody was guaranteeing a recession, right? You don't need me to tell you what happened with the semis. So we were having a little chat in the steam room this week. What would be, what anybody thought might be the most neglected or shorted group on the street going into next year. Now, believe it or not, even though it's just a month left, there's some decent time here, right? You got some time to where, depending on how things shake out, it could be really anything. But right now, I would say the front runner, I think the chalk would be energy, consumer discretionary, believe it or not, was there. But now, off this election, I don't think that's going to be there anymore. But you never know. You never know. So that's kind of where I'm looking at going into the end of the year, the start of next year. As far as maybe looking at positions with a little bit of time. People are talking about the small caps, possibly, right? Fingers crossed. I don't want to hold my breath. Being one of the spots. China, people were talking about. So you got several different options that we can look at towards the end of the year. And I think the thing to focus on now to the end of the year is where the hot money's at, right? And that's more of short-term tactical trading, momentum trading, that sort of thing. Right? You don't want to short-term trade something that doesn't have any sweeper activity or any momentum. Right? I mean, that's the last thing you want to do. You want, on a short-term basis, you want to trade where sweepers are going bananas and where there's momentum, right? But and at least for me, for swing positions, it's different, right? I'm looking for situations that have no momentum that sweepers may be tipping me off to. So that's kind of the way I'm looking at things to the end of the year. And just to refresh everybody's memory, and nothing replays the same way, but the last Trump election, I guess you could say this about any election, but Trump gets magnified. The groups that were hot and led out of the gate, and boy, did they lead. They were shot out of a cannon, okay, off that 2016 election. The financials, the cyclicals, okay? Steel names. If we remember U.S. Steel, Steel Dynamics, Nucor went ballistic. I don't remember how long. I think it was for a couple months, but parabolic moves. Eventually, they became the worst things to be in during that Trump presidency because of the tariffs, right? The cyclicals couldn't catch a bid. They were awful. The semis, the steel names. You remember every tariff tweet, U.S. Steel used to get hit, right? So the point I'm making is that the stuff that possibly leads here early on and stays hot is not necessarily the place to be as we go into 2025. All right? So that's the stuff we want to be in tactically on a short-term basis, right? That's where we want to trade. But for swing positions going out 3 to 6 months, not necessarily. That's the point I'm making, right? Yeah, like, and what's interesting so far is that we saw kind of, we're just a couple days in, but initially we saw like that Trump trade. We were even seeing it pre-election. It was getting priced in, but like today and yesterday, it maybe initially would start off like that, but then it became much broader. The action's been much broader, right? Like, don't get me wrong, Bitcoin, which has become a Trump trade, is on a tear, right? The Bitcoin plays are on a tear. A lot of them already have been on a tear even pre-election. But now there are other things involved, right? You got Amazon that's been ripping. Right? It's a broad range of stuff here the last couple of days. So what I think is going to happen is you may get more of that Trump trade positioning for over the next month into the end of the year. And then we want to be looking elsewhere as we get, again, maybe it might be too soon, but as the calendar flips. But we'll see how it goes. But yeah, this STLD, I don't know if you guys remember, but actually was one of the few names that I put on the top bet list. Top bet list has been scarce because of earnings and the election, but it was one of the post-earnings names that caught flow that I put on the top bet list. And, it benefited off the Trump election. So you benefited off that as opposed to anything else. But yeah, some of these things. The banks really, because it happened, it's almost like I remember looking at this BlackRock when it was catching action with time. And when you feel in your gut, this thing come anywhere near that expiration is going to be a huge winner. But you're looking at it day to day, and it's not really making much headway. Up a couple days, then there's a flush, right? And then you almost lose track of it in a sense over a couple months. And look at this thing. BlackRock, didn't break out yet as the financials were breaking out. Right? So this is the setup you have. Oh, it's so annoying here. This is the setup you had in BlackRock. Right? So you had this big move here. Came in, nice, right? Healthy consolidation, chopping around, building a base. And look at that setup there as it's catching decent looking sweeps with time. Right? Front running a breakout there. But, while you're in this, even as it's going higher here, it's kind of choppy, and then you lose track of it, and it's just gone. Look. Oh, matter of fact, I think it was here. This had to be it. So watch. See? Pops, then comes right back down to where it started. All right? And then at that point, where you should be interested, you kind of lose interest. You're looking at other stuff, and then you lose track of it, and then good night. But all these things. What's the other one? Blackstone. Look at these things. All right? Not to mention the names all you guys look at, like the GS and all these things. Look where we were seeing action GS and calling it the Trump trade. So that's the story. Other than that, let me see. Anything else that was, you had some of the other sentiment stuff that I don't get too wrapped up in, like you got the survey stuff, creeped higher. Nothing too crazy. I think here's the most important thing, right? And Steamroom members, we've been talking about it for a few weeks now. Why the VIX was so important and the unwind of VIX, okay? If VIX traded higher, right? Just grinded higher or even remained where it was, those systematic funds that we pay attention to were capped. Okay? They couldn't add any more equity exposure. As a matter of fact, they had to reduce some equity exposure if VIX remained where it was. Okay? But if VIX started to come in, like it has, all of a sudden these systematic funds, they got some room to ramp up their equity exposure. All right, so even though they were temporarily capped because of the VIX, they weren't capped if the VIX came in. And that's kind of, I'm not saying this whole move is based off that, but think about that, right? Anybody who's paying attention to that stuff, especially funds out there, if you know that money's coming in buying, you're going to front run that anyhow, right? And that's what I think we're seeing. That's why you get these exaggerated moves. So as the VIX comes in, and McElliott's been pounding the table on it, right? Anybody who follows Charlie McElliott, he's been pounding the table on it throughout. It was the only thing worth paying attention to. It really was. At the index level. Now I think it still applies here in a sense, less so because of the move we've already seen. But, if VIX kind of stalls out here now, right, because of the washout, the aggressive washout already, you could get a scenario where the indexes get a little choppy, but there's still going to be momentum in single names, no doubt about it, and probably a good amount of it. But if you get more rinks here and VIX, you get back down to where it started, that's where you get that melt up. And again, me personally, I think that becomes a big, big problem. I think that becomes a big, big problem going into the start of next year. A big, big problem. So those are the things, a few of the interesting things to keep an eye on here. Name-wise, believe it or not, I really haven't added. I actually trimmed into the recent rip here. But a couple of new names I think you guys are aware of that I added, that I was in for swing trades was this one I sold, and I think it's going higher, so that was probably a bad move. But I sold it yesterday. And this is kind of the problem why I didn't, even though I have a decent profit on it in a short amount of time, I was reluctant to take it because even though it's a nice profit, my gut's telling me this thing's going higher. All right. So I'm out of that now. And this guy I sold even earlier than that, this nuclear play, MIR, and that's higher than where I sold. So it goes to show you how much I know. What else? Oh, I sold this. That I kind of got. I was fortunate to get a nice pop at. I got a little left of this. This is kind of a longer term play. I do want to buy this. This is what I'm looking to buy. DBRG. So it's in the same group. This one was the one that caught some really nice action initially. And now they bought this one off the dip here. If I'm not mistaken, I think it was a bull risk reversal. I don't remember the date. There was some time. But I'm going to buy equity because, again, this is more of like a REIT that pays a dividend, even though it's tied to like the AI data center shit. Okay. So there's a couple things that I did recently where I'm looking at. Oh, and I bought this one. You guys know about this too. This too is kind of more of a longer. If it was a shorter term play, I'd probably be out already. But more of a longer term play. I'm going to try to sit in it a bit. EQT. Caught some really nice action. Same thing there. Bull risk reversals. It looks good. Looks good. It's crazy how much better this looks. I think they reported today because I used to look at these things. They used to look like a mirror image of each other. This ET, which our boy Sahil works at. So that's one of the newer names I played. EQT that I'm in. Everything else I've just been kind of day trading in a sense. Nothing. And my other positions I'm still in, that I've been in. Gold I trimmed a little bit. I think you guys know about that. The gold miners I've been out of, but I'm still in those Bitcoin / AI miners. Um, my full positions I got BT that I'm still in, BTDR, and I don't have a full position, but I got a decent chunk left of this Wolf. The rest hot stuff like that. I got smaller positions left. This Wolf, by the way, um, into this rip here is where I sold half my position. I had a really nice sized position in Wolf. If like you guys probably remember, we talked about it enough. Down here was the entry, uh, but I've held half the Wolf, and I just can't. I don't want to sell it. Wolf is one of out of all of them. Wolf is catching right now probably the best looking action. Another one that I didn't buy swing trade. I day traded a few times, but this guy, and look at the move there today, right? So a ton of action in this cores, again, as many of you know. So they all look good. They all look good. I mean, I wouldn't. Again, these things I wouldn't chase per se. You get dips on them. I know they're hot now. They are trading with Bitcoin, so a lot of these things are trading. I wouldn't say Wolf is kind of not trading with Bitcoin. Wolf has been. That's what I like about it too. It's kind of more on its own island trading with AI stuff. But a lot of these things have been benefiting off Bitcoin to rip there, and Bitcoin has been unconscious here. Ooh. All right. The liquidity bros that we follow were talking about how liquidity is at a point now where the Fed or Treasury may possibly need to pull some strings behind the scenes. Maybe that's already in play by the looks of it. Happened to me coin recently. I sold coin and then it ripped up. Yeah, see that's the problem. And there's like I'm in the business now. I'm in this game. You guys know what is it? 27 years. I've been saying like 25 years. I think for the past 10 years. God only knows how long now. But I've never found a solution for taking profit that is gospel to me. Okay, the way I think the most efficient way that I've seen is what sweepers do, and we see them do continuously, or what Ranchero preaches to all of you, right? Rolling. That's that. And if you're in equity, you sell the equity, lock in some profit, take some of that profit, and go in right close to the money, high delta leaps. All right, so you take a lot of that principal risk off the table. That's the only solution. But the problem, even with rolling, is unless you're like sweepers and willing to give up that last batch of rolls, you're gonna at some point take it off the table, and it could still go higher. So, I think you got to have an idea of what you're looking for ahead of time, and if you see that, you got to be happy, right? Like the only reason I'm still in some of these AI miners, Bitcoin miners, is because when I played them, because of the entry and because it was kind of not what much spoken about. Like everybody knew the Bitcoin miners, but looked at them as Bitcoin plays, But once we got an idea that sweepers were accumulating positions more based on them transforming their business, it kind of had a sexy appeal to it longer term, especially though off that entry, right? I think the entry for me, like, was most important part of all that. Right? Because like up here or up here, you know, for me, it still doesn't have that, nowhere near even close to that appeal, even though if you tell me these things are going to be huge down the line. But down here, when we were seeing initial activity, that's the best, that's the best spot. And the reason why is when you get lucky and happen to run into some of these nice winners, that initial activity at a quality spot, you're rarely underwater for a lengthy period of time. You know what I mean? You always have some cushion to play with. Like, think about it. Like, right, even here, right? And, it gave back a chunk of the move, but I still was not in the red on the position. And you see that a lot of times off initial activity at a nice spot. Kind of like, right? Like these things, too. All right. Again, I think this is like defense. I still don't know what they do. But the only reason I liked it is it broke its virginity, catching its first batch of sweeper activity. At what for me was a beautiful spot. So again, that whether it makes sense to you guys or not, that's kind of how I look at it. Other than that, exactly, rolling is the only way it can take some of the pain away from selling too early. So what else is there? I mean, there's a lot of stuff. What do you guys? Again, I don't want to get too much in the back and forth here, conversation wise, because the lag is a disaster. It's going to drive us nuts. But rattle off some symbols. I know quite a few of you. I see T out there, Trey. I know like the nuke stocks have been great to you guys. I mean, whoa, unbelievable moves in those things. Unbelievable moves. The nuke stocks, the space stocks, all those things. They just unreal. Some of those moves. But like even this caught some action today. Is it TLN? Yeah, TLN. Look at these things. Insane. A-Lab, yeah. See, same thing, right? A-Lab, wow. Oklo, that was the. And what's the other one? SEM, SEM, right? See, Oklo, like you guys know the action in Oklo was really nice, really aggressive, and the setup was great. What I was uneasy about swinging a position in and holding it was that it was a SPAC. It's kind of been my thing to avoid SPACs. It's saved me a lot of money over the last couple of years. But other than that, this thing has been unconscious. Is the other one SEM that we played or something like that? No. What's that one? The other one with the Oklo that was catching action. The nuke play. ASPI, that's another one. Wow. Yeah. Oh, talking about quantum. Did you play this quantum? IONQ? I know a couple of people in the room played this. Horizon, I think, is still in it. God bless his soul. What a move. What a move. See, and this was one too, because you had earnings there. But where they started buying it, you had a decent cushion to where if you wanted to hold through earnings, and it was worth holding through earnings. This is what I'm talking about, kind of that underbelly, sexy part of the market. Because there's not a lot out there. It's not a lot out there. Once people get excited and their eyeballs they get the attention on it, that's it. This is what happens. This is what happens. NNE, right? So here, that's another one. Oh, SMR. That was the symbol I was thinking of. This one. Huge moves, man. Huge moves. KKR. I mean, that's a beast. Oh, is that a data center play too? I didn't even realize. I just assumed like financials because they've been unconscious. You want to see another one that usually is a slow mover that's just been ridiculous? This KMI. Look at this. Kinder Morgan. That kind of took me by surprise. I saw it the other day. I see Sahil out there. I know he's long Tesla. You see the Tesla action the last few days? Complete insanity. Bombs all over the place. Bombs all over the place in Tesla. Yeah, so big time. Yeah, I'm still waiting, and I can't believe there hasn't been any half decent looking sweeper activity in this TEM yet. I posted today. There was a little bit of call flow there today. But I've had my eye on since over here. Oh, here's one. Here's one. You guys just reminded me. This guy, RBRK. We talked about this name on the on this webinar a few times. So this is cybersecurity, I think. And was it this week or no? I think it was last week. Last week, it caught a couple of sweeps with time, decent looking sweeps. RBRK. And it's funny. I'm saying that, and I'm not in it, unfortunately. And I should be. RBRK. How did I forget to bring this up to you guys? Because I know a few of you look at this name. So definitely keep that name on the screen. I don't even know what I can't believe I'm not in this thing. I got to get in this thing somehow, some way. You know what it was? I didn't want to buy it before the election. And now it's kind of a little bit higher, but I should just buy some anyhow, and maybe I'll add to it if it dips. What other names you guys got out there? QBTS. That sounds familiar too. QBTS. D-Wave. Oh, this is another quantum play? Does this trade options? QBTS. I don't remember seeing. Oh, this looks like a SPAC too, right? This looks like a SPAC. VITL. Is that? Let me see. VITL. This sounds familiar too. I think we saw a little bit of flow in this thing at some point. I think we've seen a little bit of flow in this VITL. They had earnings. It was down off earnings today. There was a little bit of flow there today. We'll check. I'll remember to check OI changes in the morning, just to make sure no pre-earnings stuff was rolling. There was so much. I couldn't keep up with, honest to God, the flow today into the afternoon. I couldn't keep up. That's how active it was. And a lot of the recent hot names, some of the big winners out there, are just the action in them it's insanity. But I think any name out there was active today. Tesla was off the chain. PLTR, the action in that thing has been bananas. Any Bitcoin play, right? MSTR, Hood. Interestingly enough, Coin not as active as it usually is. Some of the others even more active. Usually it's like Coin, Hut, right? Not Hut, Mara. Coin, Mara, Riot. That caught a little action today, Riot. But it's been a lot of the others, the Wolves of the world, the Cores, those sort of names. MSTR has been really active. Even before this Bitcoin move, it was active. Just a ton of action. You had Amazon yesterday. What was it? March calls. They were bombing. There's just there's an obvious chase out there right now. There's an obvious chase. So I gotta sift through. That's the one I think bad thing. It's good again. It's good if you're getting in the middle of for scalps or trading intraday. That's where it's good because there's tons of momentum in these things. But you guys know me. I like more quiet than I like to see this type of act. You're not going to see this, as a whole this type of action, but like Amazon catch the sweeper activity it caught yesterday in a more quiet environment than we're in right now. Not when everything's up and everything. It almost feels like they're just throwing money at shit right now. The last couple of days. So I'm more interested to see once things settle in here, what the action looks like from there. You get a lot of cleaner read. Guess what I'm getting at is there's a lot of forced buying out there right now. A lot of forced buying. Yeah, China names. The problem was you had the election, right? You had the election, so like ASHR, we started to see a little bit of flow in. Like even like Bitcoin, we saw BITO. If you guys remember March calls, insane amount of March calls bought. But that was ahead of the election. That was into the election. So that kind of you had that a huge event there. So I'm more excited to see what the flow looks like when things settle down. I think that's where you're going to get a truer read of the real buying out there, as opposed to just the forced buying that you see when people chase. SN. What's interesting about SN? I think you had earnings. SN. What people are concerned about, so I hear, is tariffs could be a problem for SN. That's the rumor. But is it a discount here, an opportunity? I have no idea. I'm just telling you what I hear, what I'm hearing. Yeah, for me, this thing's just up a lot. How's this guy doing? Oh my God, there's no stopping these things. Unreal. This one we had a nice move recently. I think earnings were involved. I figured that. But I think if you guys remember, I think we talked about it again with this. I think we talked about it on this webinar. We saw decent looking action here, right? It feels like that was a week ago. Look where that circle is on the CLS. Right? Look at that spot too. Nice spot there. Even if you didn't think a breakout was coming and a rally like we just witnessed, right? Because here, even if it's in, well, that's what I wanted to do with this line, but hold on. I can't move it. Even if you're in, a downtrend per se, you still got a trade there. You know what I mean? Hims, that had earnings, right, in news. Yep. Damn. That's right back to the top of the range there. CRC. Wait. Oh, I got the wrong symbol on here, right? Here it is. Wow. CRC. I remember that. Jojo. Nice job, brother. Melly got hit. Let's see. Wow. Earnings, huh? Yep. Earnings. Interesting. See, that's why. Did I see the Druckenmiller interview? No. You have a recent one? Which one? Is it recent? If it's recent, where can I get a link? Hit me up on Twitter or something. Give me a link. Thoughts on the space sector plays with Elon? Yeah, one thing, if you don't know about me already, getting into the story I don't really get too wrapped up into the story of things because kind of like if everybody's talking about a story, that's the opposite of what I'm looking for type of thing. Um, again, there more than likely will be momentum, and it could last longer than people think. But if that's solely what they're running off of, uh, you don't want to get too crazy chasing that move because you could get in trouble. Again, I give you the example of the 2016 election where you had a lot of that stuff going on and shit hit a brick wall. Like, let me see. Does the X chart show it? I think the banks too. I think were involved because I remember they were talking about how Mnuchin was from Goldman. The other guy Cohen was from Goldman. Trump was putting all Goldman guys in, giving them jobs. So Goldman kind of was the Trump trade, and it had crazy rip off the election. But then, if I remember correctly, people got killed in that thing. Let me see 2016. Let's see here. Here it is. 2016. Wait a second. Oh, yeah. 2006. The election was 2016. Wow. So this lasted. No, here. That's right. Here. So here it is. Okay. So this is off the Trump election. Right? That was the move. All the steel stocks. That Trump trade. And then, they kind of went just chopping around, going sideways here. And that's where I remember a lot of people buying it basically. And then had one more pop to highs, and then look at it. Gave the whole move back. So that's kind of what I would keep an eye out for. If you're not a big chaser, kind of like I am, you don't really have to worry about it because you're not chasing anyway. But for those of you momentum players out there who get aggressive and chase, you got to be careful on the story, the theme plays. So the space stocks, the point I'm trying to make is the space stocks already have been bananas. Ooh, look at this thing back then. Right? What's the other one? ASTS? Oh, this thing already has been dead. So yeah, I don't, that's not my cup of tea. Put it that way. That's not my cup of tea. What I want, ideally for me, is I want to see sweeper activity, right? Initial signs of sweeper activity, and then I come on to this webinar, and one of you guys are telling me, "Oh, maybe they're playing that, or maybe there's a play." That's what I like. You know what I mean? I don't want the story out there and everybody already in the play because of it. RKT is interesting here. Yeah, it's more of here's the thing with RKT, it's a rate play. Plain and simple. That's the problem with it. Now that may be good or bad, depending on your outlook. It's a mortgage rate play. So if rates come in, you're gonna get a nice bounce here. But because rates have been creeping higher, especially of recent, and it may have been front running that move, right? Because kind of the Trump trade was starting to get priced in. That's what's been going on here. But I would even that. I like this spot a lot better than up here of that move, like we were talking about a few weeks back. If you like it, yeah, it's definitely a rate play. Surge, that's another power play, right? Oh, robotics. This is robotics. This is not awful. If it saw some aggressive action, you know, again, I rather this over here didn't happen yet. All right, because that's why a lot of people know about it. A lot of people are talking about it. I think Nvidia made an investment in them, type of thing. I think, but I like that it's already kind of been digesting that. If it sees sweeper activity, I'm not going to just go buy it on my own because I don't know how long this digestion can last. Yeah, see that's Joe. I'm right with you. This is the problem, like I've had, and what's the answer? What's the answer? I bought gold. I bought GLD. I bought the gold miners, the ETFs. If you guys remember Nugget and JNUG, and a few of the mining stocks, and they've had nice moves. And when do you pull the plug? When do you pull the plug? Um, that's kind of the problem. Unless you like it over a multi-year time frame. So, but do I think gold is going higher? Yeah, I think gold goes higher. Initially, what I liked about gold, and obviously the miners, because the miners you play off gold, they started to see sweeper activity, which was telling me there was accumulation coming into it. But the ETFs were seeing outflows consistently. There was no inflows in the ETFs at all yet. So, being that these things were already performing well and they're catching flow and aggressive action in some of them, it's only a matter of time. It's only a matter of time. So kind of that was my thesis, to hold on until we started to see inflows, and we've started to see inflows. Now that doesn't mean the end the move is over with. It's just, you got a lot more bulls in there now. A lot more. A lot more bulls. So lengthy consolidation wouldn't shock me though. It wouldn't shock me though. That's kind of why I sold. Now again, gold miners, the ETFs, I sold them, and it wasn't the right move because I missed out on upside here. GLD I trimmed just recently, so too early to tell yet. But that's kind of why I took profits off the table. I left a little bit of GLD because consolidation wouldn't surprise me at all. You got, positioning is a lot more bullish now. That's uranium. That's the junior miners. Uranium. The symbol you just made. This. Yeah. Again, this has been a trade that's been going on for a while. This CCJ doesn't catch as much action now, but here you can see the line back here. Coming out of this move earlier this year, they were bombing the living daylights out of this thing. All right, and this. Oh, I remember this ETF, URA and URNM. That's the flow I remember. I don't remember the junior miners catching flow. So, more, again, it's not new, right? It's not new. It's older news. Not to say they can't go higher, right? We're seeing a lot of not new continue higher. But I look at these more trades than looking to build positions. I just keep buying. Oh yeah, you're in the business. I keep forgetting. So there you go. So yeah, we got inside juice from you. So you really think gold is going higher though, Joe? All kidding aside, net, big picture wise, it goes higher, right? I mean, it's going to be really difficult for it not to, right? Just the dynamics behind everything here, from money printing to currency issues, right? countries trying to get away from the dollar, all sorts of different shit. But that's more of a big picture thesis right now. What else you got? Stacy's talking about, what name is that, Stacy? Uber partnership? What name Uber partnership? How's this Uber look, by the way? Still looks good. Still looks okay. Still looks okay. SFM. I know the stock. Wow. Dimitri, what the are you kidding me? Sprouts Farmers doing this? Gee whiz. Oh my God. Even if I was fortunate enough to have bought this thing, there's no shot in hell I would still be in it off this move. This thing could have barely moved. Look at this. Look at this menagerie. All right? So even if I happen to buy it like somewhere here, I'd be long gone in the high 40s, and I would go to church and light a candle that following Sunday. Or that move. And meanwhile, look where this thing ended up. My God. That's nuts. That is nuts. You got some crazy moves. Yeah. That's what's giving me a little uneasy feeling. Things are gonna need to digest. But we'll worry about that come the end of the year. You know what I mean? There's still, I think there's still a decent amount of stuff out there that could be played. And I think, guys, this we were talking about on the last few member only webinars. Any name that's been consolidating out of favor, in a sense, especially for you guys who are Steamroom members, we were talking about like AMD and stuff. I think these are names that if you see quality buying, right? Like again, if you're a Steamroom member, if you see that me put an AMD on a top bet list one day off some action, and it's a name you like to play or look at, I think these are the ideal spots. This is where for my style, solely off sweeper activity and looking for those quality spots. This is exactly for me what I would want to see. Right? Now, again, time frame is what we're talking about here. Keep that in mind. If you are day trading, if you're flipping, if you're extremely tactical, right? This is your time. Okay? You do not want to be trading in here. Right? There's no bullish momentum, very little. Okay? This is where they're tripping over themselves to get in this thing. But if you're swinging positions with some time because you're looking for that larger move or you're looking for that sweeter risk reward, for me, I want nothing to do with that up here. Like now that it's digested this move and it's on everybody's do not touch list, and it's on, you hear it out there, I'm sure, from people. Like this is where I would want to be. This is where I want to keep my eyes peeled for some signs of accumulation. Right? For positions. So any name, anything out there that a stock you may have liked, and didn't want to chase, and now it's in some digesting or consolidation. That's where you want to keep your eyes peeled going into the end of the year for those type of trades. RGTI, I don't know that stock. Stace, RGTI, what the hell? Wait, maybe I do know it. RGTI. Spaghetti Computing. No, I don't know this stock. Is this a SPAC too? This looks like a SPAC. Oh, this is a cheap one, $1.40. Tobias mentioned Unity. Yeah, this is a tough one. This is a tough one. This is a tough one. These are tough. Yeah, even we talked about these, right? Even when they're going higher, I looked at like AB&B, right? I thought AB&B has been in strong rally mode. Like I thought AB&B was one of the better, more constructive hockey stick plays. And then I looked today, and I mean, you talk about torture. Look at this thing. Yeah, they're tough cookies, man. They're tough. How's the snow doing? That's the toughest of them all. And down here, you got earnings anyway. You got earnings now. But for a trade, you already got a nice pop for a trade. Which one a hockey stick? All right, well, this is a dollar stock. Let me see. Yeah, this is a this is a hockey stick. But here's the difference is it came public right at the start of the bear market. So I wouldn't put this in the hockey stick category. Hockey stick is this, Stace. When I'm referring to hockey stick, it's stocks that have had parabolic moves in like a prior bull market or bull run, have had big moves, and then go down and stay down. You know, so that's kind of that RGTI is not really a hockey stick. Sahil thinks Snow will do okay after earnings. So there's a vote of confidence for you. I really don't know. Like, here's the problem. Like, Snow, all kidding aside, like down here, I got deja vu because I think we were talking about it a couple of weeks back. Down here, you can make the case for playing for a squeeze, right? Ahead of earnings. Like, you're buying it in this range. It's showing that it's trying to bottom, at least short term, right? You keep a stop a little below there, and you're looking for a squeeze. Right? I get it for a trade. But the problem is, beyond that, who knows? This thing could squeeze to 160 and still be in hockey stick mode. You know what? Here's what I'm getting at with these things. Nobody knows. I don't know what Snow's gonna do. I wouldn't have the audacity to pretend I tell you guys that I know. Okay? What I'm saying is this is tough money. Like, you got to earn your money trading Snow. You understand? The probability you're going to get a smooth trip on a long Snow position is extremely low. Low probability of a smooth trip. Okay? That's what I'm getting at. I have no idea what this thing anything about, like, I don't know the fundamentals of it or anything for that matter. I know it's expensive and I know it's a hockey stick. But for me, like, the market, there's tough money where it's extremely difficult, and that's a lot of names that people like to trade because they're exciting. And there are other things that are at spots that, if you're right, you'll get a smoother trip out of. Like Snow, I don't know where I would be right. Right? You see, like, look, how many times people bought a bottom and thought maybe they were right. Like this, the chart doesn't even do it justice. This is torture. You torture yourself holding through this in a bullish market. It's absolute torture. Yeah. And there's another one. Exactly. There's another one. Right? And, to this day, like to the minute right now, people are trying to figure out SMCI, bulls and bears. Right? I don't know if this thing's going to bottom and rally hard, squeeze hard. Certainly could. Or it goes to hell in a handbasket because of what's going on with it. I have no clue. But what I know is that's a tough trade, right? All around, there's nothing easy about this trade. IV is inflated because of what's going on with the company. So if you're dealing with options, you're already getting robbed, right? And think about how many hands are in this cookie jar trying to get some money out of it. You got bulls, you got bears, everybody is looking at trying to trade SMCI. Everybody. The complete opposite of what I'm looking for, right? And you guys know it's got nothing to do with the company. SMCI was a Steamroom favorite. We loved SMCI, right? Before anybody, before a lot of people were even talking about it. Nowhere near how many people know of it now. Yeah, right? Especially like if you guys were, especially anybody in the Steamroom who may have traded it early on, like you guys want nothing to do with this now. This is a different animal now. You understand? When a lot of you traded SMCI and made good money with it, okay, you were dealing with a name that not the street wasn't aware of, right? Was seeing sweeper activity, the street wasn't aware of it, the retail wasn't aware of it, and had not only a profitable company, explosive growth. You had no sellers anywhere to be found when you guys were trading this thing a year ago. Now you have the complete opposite. The complete opposite. The complete opposite. And those of you know, again, if you're watching the flow, there's call buyers, put buyers, there's flow all day long. I don't know if it's bullish or bearish because I'm not paying any attention to it. I don't even pull up the chart. I don't even know what the stock is doing. I want nothing to do with that stock right now. Nothing to do with it. And I'm not saying because it's even bearish. There are like even Nvidia, you guys know, Nvidia's as bullish as you're going to get, but because of how active it is, right? Because of how many hands are involved, that's not where I want to be involved. There's no edge off the flow in that sort of thing for me. No edge. Where a name like this. Again, I'm just giving an example. Okay, cyber security name that just came public and is starting to see sweeper buying, right? That's what I'm interested in. And what usually happens, not all the time, but what usually happens is 6-9 months, RBRK, all of a sudden everybody's starting to trade it, right? It becomes a crowd, it becomes a PANW, it becomes a SMCI. But here's the difference, okay? If that happens in RBRK from here, if any eyeballs get on it anywhere near in that fashion, there's no selling. Who's selling it? Who's going to sell it? Nobody's in it. All right? If there's a long only fund, if there's a fund or an institution that picked up on RBRK and wants to build a position in it, you got a stock that went from 40 to 60 just based off that fund's buying. Nothing else. So, that again, it's just the way I look at things off the flow. GXO. I think that's a tranny. Tranny, I mean transportation, by the way. GXO Logistics. Yeah. I played this GXO. I remember this thing. I think it caught flow maybe a month or two ago. A little bit of flow. I think it caught news. That's why I remember it. So what's on Capri? There's news around Capri, isn't there? Isn't there something going on with Capri? With a deal with somebody? Oh my goodness. I haven't really been following it, Tobias. I know I hear it on Squawk all day long. I did not play Soon today. And to be honest, I don't play Soon that often. I still have some equity that I've been holding in Soon from 2023. Oh, yeah. That's why I like these circles. Here you go. This is where I bought Soon. And I'm still holding some equity from right here. How fun is that? That's a long time ago. And again, I think I don't know this company, what they do, right? I bought it, traded it. A couple of us made nice money and it happened right away. We got lucky. And it has AI in the name. Back then, that's when AI was just starting to heat up. So I said, I have $1 entry on a stock that has AI ties. I'm going to, I love some. So that's it. I mean, I didn't. Soon you do have earnings coming up here. And they do like to squeeze it ahead of NVIDIA's numbers too. It's got some affiliation with NVIDIA. Doesn't NVIDIA have an investment in it? Something like that? But for trades, who asked me that? Shank? Oh, Shank, yeah. For trade, Shank, I mean, these aren't the worst spots, right? Like if you're looking for, see, personally, if you're looking for trades, you got to sell them into these type of pops. But I just be careful chasing these things. That's all. Be careful chasing the gaps on these things. You're not going to get burnt every single time. That's the problem. If you got burnt every single time, after a couple times, you wouldn't do it anymore. You get away with it sometimes, but a lot of times you don't, and you take a hickey from Kanicki. Yeah, it always for earnings. It always catches flow. Always. And several reasons why, but I'm sure it's illegally shorted or whatever, shorted in general, and they hedge into earnings by buying calls. But anytime the spec names catch flow, this guy catches flow. A lot of these names have been really, really active. Oh, Peloton, right? I think Lucci bought some Peloton. Stace, this is Hockey Stick Central right here. Right? Big move. And you see the difference? Same stock. Oh, come on. Peloton, off the COVID lows, was right up there with the best plays off of flow that you could possibly have. Okay? Best plays. But that was a different bull market. Right? This thing just came public, caught ridiculous action, and erupted because of that stay-at-home theme. Straight line, right? No dips. But, stock went from what? 10 to 170 in that bull market. I mean, that's a parabolic move. You know, you go from 10 to 170, you better be printing money quarter in, quarter out. Right? Your growth better be insanely ridiculous. Otherwise, they're going to punish you. So, now it's almost like it's a new stock. It's a whole different thing. Even though it's the same name, same product, now it's a hockey stick, heavily shorted. You almost, you're praying for like a buyout or a contract or the bias. I like that analogy. That's a good one. I'm gonna start using that. The Stanley Cup of hockey sticks, exactly, Stace. Exactly. Moderna, same thing. Same thing. Again, one of the best in the COVID bull markets. Top, right? Top winner. Top winner. Yeah. It's a different market. COVID, nobody cares anymore. They got vaccines. Right? They still they're still in the same business, but stock went from, what was it, 2015 to 500. I mean, let me tell you something. That COVID bull market was insane. It was insane. That whole stay at home theme, people thought were like that was just a new way of doing things. And the market just was pricing in all of it all at once. It was insane. Yeah, yeah, yeah. See, and there you go. Like here, right? You got Path, Cassie name, which they're, let's say same price, same type of stock. Okay, hockey stick, and then you got like this, and they're in the same sector. I don't know fundamentally who's more quality or who's got better growth, or you know, I see bag holders galore here, right? And I see nothing but the heavens above its head here. Right? Again, I don't know for certain if Path is going down or RBRK is going higher. That's got nothing to do with it. Right? If they start to go higher, right? If that sweeper activity I see in it gets off to a good start, RBRK is not going to run into much selling at all, if any, and Path could run into a whole bunch, as it has for months and months. And that's, just based just off my experience. COVID turned you into a perma bear? I can't blame you for that. I mean, that was crazy. That was crazy. Yeah, it certainly was bubbly. It certainly was, from SPACs to just everything going on, the retail involvement. It was, I can't blame you. I can't blame you. Crude went negative. Yeah, that was a crazy time. That was a crazy time. Anybody like crude here? Crude is the one thing as a contrarian right now that's set up in a bullish way. It's got so many things going against it right now. Just fundamentally, logically, that. And I'm not a big crude fan anyway to begin with. I don't commodities. I'm not a big fan of. But yeah, you got Trump elected now. But crude is the one setup where you got tilted to one side of the boat, bears. Yeah, and maybe the crude, the energy names end up faring better, right? And they have been, right? That's been the case. Um, that's why, like the EQT, I wanted to buy some of that anyway, because I know it's going to be hard for me to make a play off this crude setup, energy setup, I should say. And now I got an energy name to start anyway. So. Yeah, right. I guess uranium, you could stay away from the fundamentals of crude. I don't know. And you got Trump there now. It's hard to envision like crude ripping higher. Certainly a possibility. I don't know. Obviously, the setup in crude, I would much rather it be in a part of tech or anything else, home builders, you know. But listen, come the end of the year, you're going to have things set up that way because of the election. Most definitely. You're going to have people chase certain baskets into the end of the year and neglect something else, right? So as we go into the start of next year, you're going to have stuff that's crowded on the long side and crowded on the short side. There's going to be setups like that. It's just a matter of what they're in and whether we're excited about them or not. They're never easy to pull the trigger. I'm telling you right now. And let me tell you something. The semis, which is my favorite sector by far, okay, throughout my career, and I'm sure many of you as well, okay? Even the semis in 2023 were really difficult to believe in a long, especially get aggressive. Meaning everybody was so bearish. Because here's what it was. Think of this, right? You were going into 2023 and rewind. That's right off the Fed hiking rates at a pace we've never seen before. Everybody was guaranteeing a recession. Everybody. It was only a matter of when. Okay? So positioning, the recession didn't show up, obviously, and you had funds and players ample time to position for a recession. So what they do? They sold the living piss out of semis, they shorted the daylights out of them, and they got long software. Right? Because that's where you want to be in a recession. Long software, short semis. So if you were going to take the other side of that and get long semis, you had to get in with all that noise around you. But boy, if you did, boy, oh boy, you would have had some payday. Yeah, now, because you had a different setup in the semis there. That's what I'm saying. Some of them, they're worth looking at now if you see quality accumulation in them. But you had semis, they were the complete opposite. It was the most crowded group on the street into these highs here. So now, this is just normal consolidation or something like that. That's all this is. That's all it is. And you look on a stock by stock basis, you got names like Nvidia that are at new highs, and you got others like SMCI. Well, that's not even a semi, but other semis that have been hit over the head, and you got other ones that have just been choppy and chopping around. But that's because of this move. Here, look, again, the circles, they do it justice. Here was that setup going into 2023 in the semis. Okay? This is what they look like. All right. Big run. Here's your big run. Here's the start of the bear market. And now I'm coming on this webinar. Okay. Let's pretend I'm coming on this webinar right now. And I'm telling you guys that the semis are the most shorted group on the street right now. And you got to get long right here with everyone guaranteeing a recession. All right? Every rally sold throughout that bear market. Right here. But, again, the charts never do it justice, though, right? It doesn't even look that difficult when you look at a chart. It never does, right? It never looks hard. You're like, oh, I just had to sit through that, or I just had to ignore that. But it wasn't easy. Look at this move, though. This is what, if you did roll the dice, this is what your payday was. And right here, okay, on this webinar, we had the discussion how semis were the most shorted. What were they doing? Remember? Buying semis, the most crowded group, and they were selling software. Right? Come on. You guys remember that? No? They were loading up on semis and they were shorting software. That was the pair trade at an extreme. I mean, geez. Again, hindsight, right? I mean, let's be honest. In hindsight, but that's what it was, But again, I'm making the point that it's difficult at the time, no matter what, And trust me, I look at this stuff all day long for years and years, and I'm telling you, still, because we're wired the wrong way for this game. You guys realize that, right? We're not wired properly. Our brains are not wired properly to play this game right. When we get excited and we feel good and right, we want to see things ripping and roaring, that's when we want to go all in and buy everything. And when things look awful and can't get out of their own way and they've been looking awful for a long period of time, if you give me money, I can't buy it. That's how we're wired. And that's why, others, Druckenmiller, all these guys are who they are. Because there's a few. There's nothing, Shank, we were talking about a little bit. I think what to look for at this point now is the end of the year, which is only a month, a month or two away here, a month and change. And I'm giving you guys the heads up now, because again, even myself, right? In the heat of the moment, there's other things going on and we ignore it. But as we get into the end of the year, Shank, we want to look at the lopsided extreme positioning out there in sectors. And that would be the opportunity, with some time, of course, going into the new year. And there will be. It always happens at the end of the year, especially off an election. Oh, we're all psychopaths. We all, we all got screws loose. We all have degenerate blood. That's a given, Stephen. Yeah, Chung, it's funny you say that because I say the same thing. But you know what happens? You can't wish that because you'll get away with it. Like all those guys, they all make in bull markets. They all make scores, but the problem is they always give it back. You understand? They always give it back. They always give it back and then some. They always end up buried. Always. The ending is always the same. You gotta understand, to make a score it's not that difficult. You roll the dice, you take some size, right? You be a cowboy, you get lucky. There's nothing that difficult about making a score. Making money consistently and holding on to it, that's a whole different cookie. That's a whole different can of worms now. And the problem, a lot of those guys, they're younger guys, they're rolling the dice, they feel strong, right? They like to show those big P&L gains. But the only way they're going to keep showing that is by keep doing that, and they end up buried. You end up buried. The final chapter is always the same, always. Yeah, but to do the right thing, because to do the right thing means you can't play the game like that. Because the one time or couple times it bites you in the ass, you're done. That's the problem. That's the problem. Yeah, Joe. Yep. That's like no matter what, okay, let's be honest, right? Like you get on social media and they're all striving to be Paul Tudor Jones. You got to face reality, right? I mean, look yourself in the mirror at some point and you got to be honest with yourself. But if you want to hang around this game and you want to be able to make money in this game, right, consistently, net, be profitable playing this game and enjoy it, you got to worry. The risk is always the more important thing to concern yourself with. Always. Always. And to Joey's point, you always got to have bullets to fire. Always. You hang around this game long enough, you're gonna accidentally run into bull markets where you're gonna make money. You know what I mean? And if you don't give it all back in the corrections and bear markets, right, over time, you're going to make money in this game. Right? I mean, you get a little lucky and you make that much more money. But, people, I get it too. Listen, I was there. I get it. You want to go from A to Z. But it's almost like at the blackjack table, right? You can sit down, you get hot, boom, 6 hands in a row. Unless you're getting up and going back to your room, what good are those 6 hands in a row? Right? You're going to sit there. What do you think you're going to do? What do you think is going to happen? Right? What's going to happen? If you're not getting up from that table, taking your money, being, oh shit, I 6 hands in a row and made a nice score, let's call it a night. Right? Or put the bulk of that money in your pocket and risk just a piece of it. But if you think like you won 6 hands in a row and that's going to go on forever, you're a dead man walking. You guys are nuts. You guys are nuts. All right, my friends. It's always a pleasure. I appreciate everybody stopping by, talking some shop. All right, so I think again the thing to look for here is at some point we're gonna run into a little exhaustion, right, on a short-term basis. Indexes probably get sloppier, choppier, more rotation. So I think the approach is to be more nimble, tactical for the remainder of the year, and then let's see how things shake out, right? As we get into December, depending on what happens from now till then, there's likely going to be some decent opportunities, I think, setups for, again, that a little longer term perspective. Yeah, not 5 years out, but more of that quarter, two, 3 quarters out. Some solid risk reward stuff. But in the meantime, we'll keep an eye on flow, new names, see if any action pops up. All right. Enjoy the rest of the night. I can't believe it's Friday already tomorrow. Another week. Woo! Right by. Week after week. But be good, everybody. Stay safe. I'll see you guys in the steam room tomorrow.